And welcome back to the Market Wolf, where I give you the best bear case, the best bull case, and I give you my opinion. We are looking at the S&P 500. It is 3:05 p.m. Thursday, May 25th. This is your update for May 26th. We are currently sitting at the 414.63 on the S&P 500, and you can see we are just now moving into after-market hours. I want to first give you the short-term bear case. You can go back to my previous video to check out the long-term bear case, and then I am going to give you the bull case and my opinion after that. So let's take a look here at the S&P 500. You can see we had that chop exactly as I called for today in the ranges I called for. So the wolf is back on the scent, and check out the fact that we've hit this fib circle right here that I've got marked out. And I want you to look, notice this pin top right here. You see this not only on the 30-minute time frame, which we are currently sitting on, but you will see this in the upper time frames as well, all the way up to the 4-hour. And I want to take you out a little bit here, just a little bit. Let's zoom out. And again, I want you to notice that this could very easily be ahead, like an M-topping reversal ahead. This can be your left shoulder here. This could be building a right shoulder or a higher right shoulder, chopping these ranges we discussed. And then if we lose, remember we're uptrending inside of this blue ascending wedge, and we could very easily break through there and possibly come all the way back down to the 403.87 to put in a left shoulder ahead and a right shoulder, and that would not be good for anybody that is long in the market right now. And of course we can see that things are looking a little different right now. Of course, I mean, they look a little bit bullish in the short term because of course you've had a bullish cross here in the short term on the 30-minute, and that's trying to recover on the 2-hour time frame. Let's take a look at that 2-hour time frame now. And on the 2-hour time frame, you can see again the bear case. We've got these pins here letting us know we're probably winding down. We're probably going to come around, come back down, and at least tap somewhere around the 412.25. And if this turns into a true bear case, again, breaking into a complete head and shoulders pattern, I gave you that level already. You see that we've got a bullish divergence. Yes, we have a bullish divergence beginning. Remember, we were already inside of a bearish divergence. So what could happen is this could just turn into some more chop here. It could be indicating that. So you could get a bounce again at the 412.93 and continue to chop around in this area. But that's kind of your bear case for tomorrow. Those are the things that you need to pay attention to. I want to now take you to the 4-hour time frame, and I want to check one other thing here. Of course, you see that pin top there on the 4-hour time frame, and we take a look at the MACD, and it looks like the MACD on the 4-hour time frame is trying to wind down. We do have a piercing there. Okay, so let's get into the bull case here because this is interesting. So we've got the MACD piercing the moving average on the 4-hour. Okay, we've got it's the downside seems to be finishing up, although it hasn't pierced its own moving average yet, even though we see the piercing of the moving average on the RSI. And when we go back to the 2-hour time frame, you can see for the bull case on the 2-hour time frame that we are in the middle of kind of an uptrend on the MACD. We are above the moving average. Now that can just be a consolidation move on the MACD. It depends on how crazy that gets. It's something we'll have to keep an eye on. So definitely a little bit more bullish there. And of course, on the 30-minute time frame, you did have that bullish cross, and we're trying to take the 50-day moving average back. We already have the 20-day moving average and the 100-day moving average back on the 2-hour time frame. I want to take you back to the 4-hour just to show you the moving averages there. I believe we're trying to get topside of that 2-hour time frame on that 20-day moving average on the 4-hour time frame. And if that is the case, I mean, this is after market. No, we're still below it. We're just below it. So it's definitely something we're going to have to keep an eye on. But if aftermarket, we play out here and we see that get topside, that's bullish. You've gotten back on top of this former descending channel, also bullish. You have gotten outside of the huge symmetrical triangle we've been in. We got a bounce off of it, the top of it, also bullish, even though we fell back inside briefly. Now we're getting bullish again. So these are all bullish signs here that we have to pay attention to, okay? Now, really, you look at the volume on the 4-hour, it doesn't look terrible. And this is a split case, right? You look at this and you're thinking to yourself, boy, sure looks like we could definitely have a move down to the bear side of things. It certainly looks like a head and shoulders pattern. And, we don't have to have good incoming volume tomorrow on Friday, even though it is a Friday. There's been many Fridays where we've just tanked. And you might be thinking to yourself, well, there's a lot of, bullish activity here going on too, which usually when you see those two things, it may indicate some more chop. Let me give you my case. I think this is what's going to happen, and I'm going to show you why. I believe that we're going to come back down. We're going to tap the bottom of this ascending wedge, and then we are going to continue on our merry way up in a continued long-term bull case. And so I think, you'll have reached bottom here at least by intraday tomorrow, and you should be beginning to make your way back up. I don't think this is a head and shoulders pattern that's going to play out here. I think that our current, now remember, you can spill out of these. That's typically what happens, but I'm going to show you why I don't think that's what's going to happen, at least tomorrow. Let me take you now to the 1 month time frame, and this is the one that's important to look at. You can kind of see it on the weekly, but it's more difficult to discern there, okay? Let me show you here. Of course, we got plenty of room to run up on the RSI. On the MACD, oh my goodness, the MACD is just like getting ready to be finished with really kind of a bear move to the downside. Maybe we'll see it begin to penetrate and really make a move to the upside on the MACD with that. So we'll see some more velocity there. Right now, this candle right here, to me, even though we haven't hit Friday yet, to me this is just an indecision candlestick. Okay, here's the big deal here. When you look at this in the monthly time frame, this, to me, when you look at this, I could extend this line out and easily make this wedge connect down here, no doubt about it. I could continue my wedge on the top side through here, and I think when you look at this candle, and not only when you look at this candle, but when you look at, let me consolidate here so you can see this a little bit better. Look at the volume. That is 2.517 billion in incoming volume. Let's look at the next candlestick. That is 1.396 billion of incoming volume. Let's look at the next candlestick. So far it's exiting 1.49 billion exiting. Okay, that is a fraction of what we have had incoming as we have moved up inside of this ascending wedge. So, is there a bear case building in the lower time frames that could give us that exiting volume? Yes, of course. But I am the market wolf, and I have to smell out and detect these things. So what I'm thinking is that until I see differently, until I see a solid break in this wedge, tomorrow you see a solid break, yeah, be careful, because that bear case is probably going to play out. However, my opinion is that we will get a bounce off the bottom side of this, and we will continue up. I still believe that we have longs that are stuck in this market with these big corporations, and they want out and they want to suck retail back in. There's going to be a lot of people that are going in on this bear case, and they're going to get wrecked. they're going to get wrecked because they expect the market to break any day. Everybody knows, and they're waiting for the market to snap. So I think that they're going to make their money back on the downside when retail tries to play the downside, and they're going to make their money back as it goes up. And then when retail finally figures it out that it's not time to be bearish right now, then they'll let it go a little while, and then they'll pull the trigger and they'll start to sell. And that'll be that. Once the machines get where they need to be, you're going back down at that point. But for now, I see this ascending wedge continuing until I see not just consolidation, not just a right shoulder, but a solid break of this ascending wedge. That's my opinion. That's the bear case. That's the bull case. We will see you next time on the Market Wolf.